BMNR has had a really strong start to 2026. And we have one key date that's upcoming in a few weeks that's going to determine a lot about the future of the company. That is, of course, the shareholder vote on January 14th. And I've made a video earlier this week around my wider thoughts around the dilution potential in the shareholder vote. And I want to expand much deeper in this video on all my concerns with regards to that shareholder vote. In addition, I want to cover all the major pieces of news, and there's been a couple on Ethereum and BMNR specifically as we went through the end of December and the first week of January. It's going to be a big video. This week's BMNR weekly recap. Let's jump right in. And just very quickly before we start, if you are new to this series and you are a BMNR shareholder, I suggest you subscribe to the channel and follow along because we do weekly updates on this company. We've been doing that for the past 3 months now, and we're not going to stop anytime soon. I want to cover the shareholder vote. I want to cover Maven updates. I want to cover their future roadmap and much, much more. BMNR is a core position of mine. Even though I have my concerns and my doubts, I'm still a holder of BMNR and I'm bullish on the management team and on the future of the company. So definitely subscribe to the channel for more updates. Let's start off first and foremost with the price action over the past week since we did our last update. Well, we've only had one trading day in the year so far, and BMNR has been up around 15% on that single trading day. So generally speaking, it's doing very well. And the real question here is, can it continue? Now, why was BMNR up 14% in the first trading day of January? Well, because a lot of the selling that we saw towards the end of December was as a result of tax loss harvesting. Now, in this video, we're going to talk about the accumulation of Ethereum. We're going to talk about some macro pieces and predictions for 2026 that Tom Lee has. We're going to talk about staking, the technical patterns that we're seeing. We're going to talk about adoption. And of course, we're going to talk about BMNR specifically with regards to their shareholder vote. Let's start off first and foremost with regards to adoption. So here we have Joseph Young, who says Ethereum is over 10 years old and it's still breaking all-time highs every single quarter on transaction activity, new addresses, active users, stablecoin activity. It's incredibly hard not to be structurally bullish on Ethereum, and I would tend to agree with that. Here we have another post that highlights the market cap for tokenized stocks is at an all-time high of $1.2 billion. This is increasing every single month. And we're seeing that adoption, especially for tokenization, is accelerating and will continue to do so in 2026. This user says there's literally $600 trillion in assets ready to be tokenized on Ethereum. If we even capture a fraction of that, that's going to be a large shift in the value of Ethereum today. Joseph Young again highlights here the transactions on Ethereum are at an all-time high. In addition to this, the active addresses on Ethereum are also at an all-time high, and the new Ethereum addresses are also at an all-time high, around 270,000. Most user and developer activity on Ethereum already broke record highs or is nearing all-time highs. So this, of course, speaks to the massive adoption that we're seeing with regards to Ethereum. Crypto Rover here highlights that ETH average transaction fees are extremely low, which suggests that it is significantly undervalued. And that's something we've seen in the past as well. Of course, Ethereum continues large-scale inflows. We're going to see this accelerate all throughout 2026. Here, Scott highlights that Ethereum has set a new L1 record with 2.2 million transactions in a single day. That's speaking all to the adoption of Ethereum as an ecosystem. And one of the main theses for BMNR is that Ethereum as an underlying asset class will increase in adoption. And as a result of that increased adoption will also increase in the price, which will then bring the net asset value up, which will then bring BMNR shares up because they obviously trade at a premium, theoretically, to the net asset value of the underlying Ethereum that they're holding. They hold over 4.1 million Ethereum. If the value of Ethereum goes up, BMNR goes up. So we care about adoption of the ecosystem. Now let's move over to accumulation. So here we see Trend Research is continuing to consistently buy Ethereum despite sitting on unrealized losses. They continue to borrow USDT to buy another 46,000 Ethereum worth $137 million just in the past couple of days, with the total Ethereum exposure sitting at $1.8 billion for Trend Research. I mean, the CEO of Trend Research, we covered this last week, said that he was going to consistently buy more and that shorts should be aware. And he is sticking to his word. With an average entry now for Trend Research being around 3,200, The unrealized losses stand around 250 million, but it doesn't seem as though they're stopping accumulation anytime soon. In fact, this is a chart for Bitcoin. And as you'll know in these updates, we cover Bitcoin and Ethereum almost interchangeably as we talk about crypto adoption in general. This is a chart highlighting the Bitcoin price and the new whales that are entering the ecosystem. 2026 is off to a bang with whales buying Bitcoin like never seen before. And this is just another visualization of that. So this is the price up here, and then this is the volume, the cohort balance change on a 30-day basis, and we have these spikes up in Bitcoin accumulation. Now, I want to also include this post here with regards to Bitcoin and Ethereum, because as I go through this, one thing I want you to keep in mind is that we have violent moves in crypto. Once things move, they can move in a pretty aggressive way, upwards or downwards. And here we saw that on December 3rd visualized. Ethereum jumped from 2,700s to over 3,200 in a single day. The average move from 3,000 to 4,000 happens in 10 to 25 days. The move from 3,500 to 4,000 happens in 48 hours. So there's some aggressive swings once the momentum turns. Speaking of that momentum, let's talk now about some technical patterns before we move on to other topics. So here you can see this falling wedge that we've broken out of to start off the new year. And a lot of the technical patterns are going to highlight something very similar. So this is a descending channel, and we've broken out of the descending channel officially at the start of 2026. This chart here highlights a support zone of 2670 and price targets on the upside from 3,400 all the way to a resistance zone where the descending channel started around 4,600. So that's obviously very bullish because we've broken out of that channel. This is also the Ethereum to Bitcoin chart, and we can see this measured move here higher. It's a bullish reversal pattern if in fact this does happen. Of course, ETH to Bitcoin is an important metric to see from a technical perspective because we want ETH to increase relative to Bitcoin in terms of the returns that it's bringing. So here's this very simple pattern here from Stock Trader Max. And as I mentioned, tax loss selling has come to an end, and we had this strong 15% move in BMNR. Of course, this highlights the BMNR stock chart, which has also seen a descending channel downwards where it finally found support around $25, and it's now bouncing higher from there. Ethereum and BMNR are going to trade mostly in unison. Here's another visualization of the breakout in Ethereum to USD. Here you have this user saying Ethereum is about to experience a 2017 style repricing, where they're basically identifying this chop followed by this rally in 2017. And I also wanted to highlight this post. This is Stock Trader Max, who highlights a reminder for all Ethereum bears out there that Ethereum is sitting above pretty much all of its main moving averages that technical chartists are looking out for. And this is just another view on the daily that highlights this breakout as well. So from a technical pattern, this is exactly what we want to see, and it speaks to Ethereum going much higher. Let's talk now for a second about staking. We see this entry to exit divergence in the validator queue. Of course, this is important because if this blue line is significantly above the red line, which is something that we haven't had for several months prior, it means that there's more Ethereum that's being locked up to collect those passive staking rewards than there is Ethereum exiting the validator queue, presumably to be put on the market and sold. So we want to see the validator entries surpassing the exits consistently. This means that selling pressure is going to ease off because more Ethereum is being locked up. And as the total supply of Ethereum on exchanges, which is already at record lows, falls even lower, it's going to remove selling pressure from Ethereum because a lot of that supply will be locked up. And one of the main culprits of this is none other than BMNR. They've gone ahead and they've staked another 82,000 Ethereum worth about $259 million, bringing the total to 544,000 Ethereum staked for $1.7 billion worth of Ethereum locked up. This is long-term accumulation, and they will, of course, get a staking yield as a result of this. BMNR MNAV tracker highlighted that they have 6% of their ETH treasury staked. Of course, this is as of December 27th. So the real number sits around double that, bringing the current yield to about $22 million per year at this price, or 5 cents of yield per share. Now, the back of the napkin calculation that I made was saying that the total yield per share is around 83 cents annually, assuming the entire treasury is staked at the same rate. However, we know that the amount of ETH that they have outstanding is going to increase. They're around 4.1 million right now, and they're going to increase that to about 6 million. But the shares outstanding are also going to increase, which we're going to talk about at length in just a second. However, I said it should still make for a nice little dividend once all is staked, because if they choose to distribute all of these staking rewards and they raise their dividend to 83 cents, and you have the stock which is trading for $30 a share, well, all of a sudden you get a nice little yield out of that purely from the staking rewards and nothing else. So it remains to be seen the speed at which they continue staking and the yield that they get from those staking rewards. Let's move on now to a little bit of macro as we wrapped up 2025. We saw that this was one of the worst years in history for Ethereum. It was actually the worst year since 2018, and that's post-halving. We actually saw 9 months of red on Ethereum in terms of the monthly percentage returns, and that's something that has not happened since 2018, where we also saw 9 red months. Of course, the last 7 years have been much more favorable, with more months closing in the green. From a macro perspective, I will remind everybody that Tom Lee does expect a 10 to 15% drawdown in the first half of 2026 in the S&P 500. He highlights this to uncertainty around the tariff decision standing by courts, as well as uncertainty around the new Fed. And if this does happen, somewhere in the next 6 months, we can see 5,800 to 6,200, in which case he would suggest we buy that dip, because end of year, his price target is 72 to 7,300, which is slightly higher than what we're trading at right now. So all in all, if we capture the lows of the year and sell by end of year, that's a 26% trough to peak move. Now, I want to play a few clips from Tom Lee himself. This one says that Tom Lee just confirmed Raw Paul's thesis on CNBC when he said that Bitcoin is highly sensitive to the ISM, and when the ISM moves back above 50 in expansion territory, it's historically lined up with the supercycle moves in Bitcoin. And in this clip, which we're about to play, Tom Lee highlighted that this is not about the old 4-year halving cycle, it's about the business cycle and monetary policy turning higher. So we've talked about this in the past. Tom Lee has also highlighted this in the past. Let's give this clip a listen.
2026 is a year like there's a new Fed, right? But a dovish tilt. And at a time when the ISM's been below 50 for a record more than 3 years. So that's really good for small caps. And as Barry says, if they deregulate banking, and we were talking about this offline, that's really good for small caps. But that's also really good for the business cycle. And we've talked about this in some of our past research. Crypto prices are really sensitive to the ISM. So the ISM moving back above 50 has historically been associated with actually supercycle moves in Bitcoin and Ethereum.
Wait, ISM going into expansion territory is positive for Bitcoin? And
correct.
And for all, interesting.
Yeah, and so if you look at ISM and Bitcoin, and you detrend Bitcoin, essentially look at its distance from the 200-day, it's almost perfectly correlated to the ISM.
Surprising.
And same thing with copper to gold prices. So copper's an industrial metal versus gold is a monetary.
Right, but all of that tells you that it's basically just risk on, that they're all behaving like an economy. And am I overcharacterizing
Yeah, I think
it?
I think that's right. I think Bitcoin's a bit of a chameleon, because there'll probably be a time when it acts like gold, but right now it acts a lot more like it's sensitive to monetary policy and the business cycle, and both are about to turn up. So that would mean anybody who thinks the Bitcoin 4-year cycle means crypto prices are down next year, we're betting against that, thinking that new highs come early, like in January.
Okay, now in this next clip, he highlights his 2026 playbook, saying that it may rhyme with 2025. This is something that we've heard before, but I also wanted to bring it to your attention. It's only 30 seconds, but it also highlights the macro view that Tom Lee is approaching 2026 with, saying it's going to have a messy first half and a strong finish to the year. And the reason why is because Q1 could bring uncertainty around policy, delayed rate cuts, doubt around AI, and ultimately it could bring a 10 to 15% drawdown in the index, but he expects a recovery by the second half of the year. Let's give this clip a quick listen.
I mean, I think 2026 could look like this year, because this year had a bear market and then a bull market. Next year, there was 2 puts. There's the White House put still in play, and the Fed put, I think, is going to come back. People have sort of forgot, like it's been dead for 3 years. It's really going to come back in force. But it will take maybe the first half of the year to get through that, because we don't have a new Fed in the first half. So I think the first half next year could be down 10 to 15%. and then a big recovery.
Okay, now that we've heard all of those, I want to wrap up this video with specific BMNR news and discussion because BMNR has an important shareholder vote upcoming, and Tom Lee wants us to vote yes to the proposed initiatives. And I want to highlight some of my thoughts and concerns and share them with you very transparently in this video. Tom here has said that the end year tax loss related selling is pushing down crypto and crypto equity prices, and this effect tends to be the greatest from the 26th of December through the 30th of December. So they are navigating markets with this in mind. Now, one video that I made a few days ago was critiquing the rate of purchases declining for Bitmine. I said last week that they only acquired 44,000 ETH, and the Bitmine market cap as a result was lower than the net asset value of the assets that they hold on hand, the Ethereum and the Bitcoin and the cash. Now, I said this wasn't a big deal in the short term because it was as a result of tax loss harvesting. And Tom Lee here, as of December 30th, confirms this, saying, hey, we're navigating the markets because we know people are harvesting their losses for tax purposes. And lo and behold, the first trading day of January, you saw a 15% move upwards in BMNR with people presumably buying back in. Now, in other BMNR news, South Korea retail traders are strongly backing Bitmine immersion. South Korea traders continue buying Bitmine immersion technologies despite an 80% drop. BMNR is now the second most popular overseas stock with $1.4 billion of inflows following its ETH treasury pivot. So BMNR is very popular in South Korea. And if you are a viewer from South Korea, definitely let me know in the comments below. I would love to know that. Moving on, Donald Dean here highlights that the world's largest corporate ETH holder, BMNR, who owns about 3.4% of total supply with updated 2026 targets. So he attributes a 1.6 NAV premium, which I think is very generous considering we're slightly below NAV right now. So it's 0.98, something like this. So a 1.6 premium is actually very generous. However, if we do assume a 1.6 premium, well, when ETH is $4,000, BMNR would be $73 and going up to over $100 as ETH goes above 6,000. Now, at a lower premium, these prices, of course, would be lower for BMNR. And here in his post, he also visualized the volume shelves, the double bottom, and the ETH prices at that 1.6 NAV premium, which again, I mentioned is a little bit generous, however, not unrealistic. We've actually seen them trade at this premium in the past. Now, I made this post and I said, look, I'm concerned about the dilution perspective around them issuing more shares and them having authorization up to 50 billion shares. That is, of course, referring to the Schedule 14, which highlights the proposals that are going to be voted on for the annual shareholder meeting on Thursday, January 15th. Now, the vote is concluding, I believe, on the 14th, and the actual shareholder meeting is on the 15th, and they have a couple of different proposals. Now, the first proposal, election of directors, the other proposals are around compensation, and one of the main proposals is around share authorization. And I want to highlight that very quickly because Tom Lee made a post here saying the shareholder vote deadline is Jan 14th at 11:59 p.m. Many are asking why we want to increase authorized shares from 500 million to 50 billion, which is proposal number 2. He also tongue-in-cheek here highlights, no, it's not because BMNR is about to dilute shareholders. I think a lot of people are also asking the question around dilution specifically, because 50 billion shares is a massive amount of shares. Like it is something that would require them to never have to ask to increase their share authorization ever again. To give you context, Bitmine right now, with all of the dilution that they've currently had, where they essentially issue more shares at a premium to buy the Ethereum underlying, which is accretive to shareholders, it's good. From doing it from July until now, they've issued about 450 million shares, roughly half of a billion shares. Now they want authorization to go up to 50 billion shares. So that's a big, big jump. And obviously, we want to ask why. So he highlights here there's 3 reasons the company needs to increase authorized shares, but one is the most important. Enable selective at the money capital raises, literally saying dilution is the first thing, because he said it's not about to dilute shareholders, but this is exactly dilution. The second one is opportunistic deals, mergers. The third one is to accommodate future share splits. Now, I want to go through this thread and I want to highlight some responses, including my own. So he said, at any time a company splits shares, the total authorized needs to be high enough to accommodate for the share splits. So if they want to do a 10-to-1 forward stock split, they would need to go from 450 million to 4.5 billion to make sure that they have shares outstanding. Tom here in his thread has a very lovely chart. He highlighted that since Bitmine pivoted to this Ethereum digital asset treasury strategy in July, the stock price tracks the Ethereum price fairly closely. They have this coefficient that's 0.015 ETH price plus accretion of ETH per share. But the scatter chart below shows the clear linkage. So here in the bottom, you see the Ethereum price, and here in the y-axis, you see the BMNR stock price. And as one goes up, the other also goes up. Tom continues saying that they believe that Ethereum is the future of finance and it's at the super cycle with Wall Street re-engineering on the blockchain. I agree. This is one of the main reasons why I'm in Bitmine in a big way. He highlights that previously they viewed the tokenization as going to drive all-time highs, targeting 0.25% ETH to Bitcoin as Ethereum proves to be the future of finance. So he's basically saying if Ethereum becomes this payment rails, Ethereum can go to these crazy prices that you previously never thought possible. It can go to 12,000, it can go to 22,000, it can go to 62,000, or it can go to 250,000 once Bitcoin reaches 1 million. So these are crazy prices, and Ethereum could feasibly get there. Now, if Ethereum in fact does go up that high, the BMNR price would go up that high. Continuing in his thread, he highlights that $22,000 Ethereum could lead to $500 per share at Bitmine. At $62,000 Ethereum could lead to $1,500 in Bitmine, and 250,000 Ethereum could lead to $5,000 of Bitmine shares. Now, of course, he says to keep the shares accessible to the public, the company would want to split the shares and reset the stock price back to $25, meaning that if the Bitmine shares are $500, they would need a 20-to-1 stock split. If it's 1,500, a 60-to-1 stock split. And if the BMNR stock price goes from $30 where it's trading right now to $5,000, they would want to do a 100-to-1 stock split. And basically here, Tom is saying that this is the reason why we want to issue up to 50 billion shares, because splitting shares requires more shares. He highlights that the splits will increase total shares outstanding, and thus Bitmine can only split shares in the future if the total authorized shares is increased. And one thing to keep in mind is that they have a 500 million limit in terms of their authorization currently. Now, I want to run through some critiques here. Roy said BMNR is up over 10% today. He made this post on January 2nd. ETH moving upward helps, but more importantly, this update from Fundstrat is likely the primary reason. Shareholders were confused, conflicted, and concerned about the 50 billion ask for share count. Tom Lee clarified the primary reason is for future splits. The only criticism Roy highlights is the delay on the clarification, but this was a significant, important update. I agree 1000%. I think that this transparency is exactly what we want, and I welcome it in the future. Roy also highlights that another piece he thought was missing was this eye-popping ask of shares, the 50 billion amount. It's because the Nasdaq moved to require authorization for adding crypto onto the balance sheet, a proposed rule from last summer, number 5635. There's a couple of pieces from this proposal, but the only one that really impacts BMNR is the need to authorize any dilution for crypto and, to a lesser extent, receive shareholder authorization for a pivot to a digital asset treasury company. They're listed on the New York Stock Exchange, and as such not impacted yet, but the New York Stock Exchange does have a weaker version of that rule in place. So basically saying he needs shareholder approval for all of these things as a result of regulation. Now, one interesting piece here is that, so there was this Redditor post talking about buybacks potentially happening. I want to highlight this response because I agree with it. BMNR MNAV tracker says there's no point in buying back shares if they're just going to do more offerings when MNAV is back above 1. Just buy more ETH, continue staking. At the end of the day, if ETH performs, BMNR will recover. Agree with that 1000%. And quite frankly, I'm cooling on this idea of buybacks as well, because I think it's clear that the outstanding share count, assuming we're trading at a premium to the net asset value, is less important to focus on. Now, Tom Lee also made this 4-minute video explaining these 4 reasons here and talking about his thesis on Ethereum and Bitcoin. This is stuff that we've seen in the past. However, it's good that he has it in a video format explaining essentially why they want to increase this authorization. Now, of course, all of that is positive, but again, it all is predicated upon BMNR being a stock that's several hundreds of dollars, if not several thousands of dollars in the future. And that begged the question, why are they doing it right now? So this user had an interesting point, saying the argument about stock price being the reason for future splits doesn't make sense because when BMNR hits $1,500 per share, most of Wall Street should already be tokenized. In a world of fractional ownership, the nominal price, whether it's $1,500 or $25, becomes irrelevant. Basically saying that everything is going to be tokenized, and as a result, we can buy fractional shares. And as a result, we don't really care about the share price being $25, and you guys don't need 50 billion shares to be authorized. Now, here's my top 3 concerns, and this is a thread that I made in preparation for this video initially to be my notes, but I also wanted to highlight it in a tweet as well. And I hope it makes sense. And this is really just me trying to voice some of my thoughts around this proposal so that I can wrap my head around it. It's not that I'm inherently bearish on it. It's not that I'm selling out of my shares or my position. I just want to understand it because some things come off as a little bit strange to me. So I started here by highlighting, I really appreciate the transparency in the thread by Tom and also the video. And I think both of those really helped in my understanding as well. Some things that I'm trying to reconcile though is number one, the timing. So the argument that these shares are for future stock splits is confusing. Why would you authorize shares today for a theoretical stock split potentially years away? In other words, BMNR is trading at $30. Why are we talking about something when BMNR is trading for $500 when that's not even close to happening at the moment? Shareholders would happily vote yes on a split if and when the price justifies it. Let's get to $100 first and then talk about a stock split, let alone $1,000. Asking for that authorization now implies, to me at least, that there's a plan to use these funds sooner. And I highlighted here that the urgency makes more sense when you look at the current share count, because BMNR currently has about 426 million shares outstanding with only 500 million room authorized. They're effectively running out of their run rate to issue more shares. And as we know, they continue stacking Ethereum through issuing shares at a premium to their net asset value. Currently, they have about 85% of the authorized capacity used. Now, since they're not even close to their 5% allocation target yet, they need to issue more shares to continue acquiring ETH. But there's a problem. They can't issue more than 500 million shares, so they need to increase that authorized capacity. So obviously, this speaks to the timing of why now. I mean, Tom Lee is highlighting something in the future about the stock split, but really there's urgency to do it now so that they can even get to their 5% target. Number 2 is the size. To hit their 5% target, about 6 million ETH, BMNR needs to acquire about 1.9 million ETH. As I mentioned, they're about 4.1 million ETH right now of current holdings. At the current prices, funding that requires issuing roughly 190 million shares. So why would the request be for 50 billion shares? Nearly 80x the capacity needed for the stated goal of 5% of total ETH supply. I would understand the buffer. For example, if they increased it to 1 billion shares from 500 million and they doubled the outstanding share count, great. But 50 billion, I said, feels like massive overkill without a clearer explanation. It gives management the biggest carte blanche in history. And also, why not chunk out the authorization in batches and have future authorizations tied to specific milestones? Hey guys, we want to acquire a new company. We want an additional 500 million shares. Or hey guys, we want to do stock splits now that the stock is $250. We want to issue an additional however many shares. Like, why would you do it all in one bucket of 50 billion shares? It's massive size, and that's the piece that I don't understand. Finally, I highlight the incentives because this also has proposals here around performance bonuses, restricted stock units, and cash bonuses. Proposal 4 grants Tom Lee 95 million in total cash potential, including 35 million guaranteed. This is in addition to the restricted stock units. This is tied to total ETH rather than ETH per share. And I highlighted here that I'm totally on board for management to get paid for performance. It's something that's well deserved because shareholders also benefit, so management should be getting compensated. However, Tom has been talking about the ETH per share being accretive. And while that's true, my concern is that the total ETH KPI would reward scale at any cost, whereas an ETH per share goal adds a guardrail in place. And I highlight here the discrepancy between his first tweet and his second tweet, where he's basically saying this is not dilutive, but in the second tweet, it's literally the definition of dilution. Now, why am I so much concerned about dilution when the value is so closely tied to the value of ETH, right? Tom showed that scatter plot where it's so closely determined. Because dilution determines how much of that Ethereum upside acts as a tailwind for the stock. In the past, that scatter plot has held true because they've only issued more shares at a premium to the net asset value. But that doesn't necessarily mean that they're always going to do that in the future, especially when you approve such a large amount. So when you issue shares at a premium to the net asset value, that is accretive because you have a premium baked in and you're essentially selling at a higher price for your shares, and you're using that money to buy ETH at a lower price, and you bake in that accretion for the shareholders, even though it's a dilutive event. However, if we provide management with all the future share authorizations that they're ever going to need in the future, there's no real guardrails to protect against issuing below the net asset value. And this is something that it's counterintuitive, but I think it could go up because the management incentives are not necessarily there. So basically, if BMNR issues new stock at a discount to NAV, let's say 0.95, they're effectively selling a portion of the ETH that they hold at a markdown, because that new cash buys less Ethereum than the shares represented before dilution. The amount of Ethereum backing every single share permanently decreases. So it's counterintuitive to issue below the net asset value. It's great for the people who want to give them money because they buy it at a discount to the underlying Ethereum that they're holding, but it's bad for existing shareholders because you're essentially getting 95 cents for every dollar you're selling. So they would never issue shares below NAV, right? Intuitively, I think this is true. I'm not saying that they're going to do this. I don't think they're going to do this, quite frankly. But again, it's a matter of incentives, right? It's a matter of what are the guardrails and the governance structures in place to stop them from potentially doing this in the future, because they have a lot of cash incentives, number one. And number two, when you talk about their performance incentives, it's exclusively around the total ETH held or the revenue that the staking generates. That doesn't necessarily protect for the ETH to share ratio. I also highlighted a couple of counter arguments here, trying to keep myself honest. So I'll skip those for right now. You can also take a look at this post in your own time. I continue here saying, to wrap up the third point, what I'm trying to say is that an ETH per share metric would ensure that growth is actually accretive to us as shareholders versus just total ETH as a standalone without accounting for the shares. Because if you're not accounting for the shares, management could theoretically issue below the net asset value. And Tom Lee has been talking about ETH per share being accretive for months now as one of the primary benefits of why you would buy BMNR instead of just buying Ethereum and holding that. I said I would not be advocating so much for this metric if the authorization was for 1 billion, because in the grand scheme of things, it's not that big of a deal. But for 50 billion shares, my question is, what are the guardrails around the governance and the mismanagement potential? Because if this is approved, management will never need another future authorization ever again. I said, overall, I'm very bullish on the team and the Maven strategy. I'm not selling my shares here, as I believe in both the management team and the underlying ecosystem of Ethereum rising in 2026 and beyond. I'm just struggling to understand the 50 billion amount all at once and why that makes sense. And I don't think this forward stock split rationale is the best explanation that actually covers all the points around governance and around responsibility of those future dilutive events. I said that I might be wrong on some of these points, and I'm happy to change my stance if the logic holds up. I actually welcome that dialogue. I said, I'm just trying to understand if I'm missing something critical right now regarding the safeguards and dilution or the specific need for 50 billion shares right this instant. Like, there's going to be more instances where they're going to require shareholder approval. Like, you don't need to do this immediately right now. You can approve 1 billion or even 5 billion right now to do a 10-to-1 stock split, let's say. And then let's see what happens 12 months from now or 24 months from now. And hey, if it actually happens much sooner and BMNR is suddenly trading for $200 a share, guess what? You can just do another meeting and ultimately get approval for another batch of shares. Anyways, I'm rambling now, but that's my main concern around this vote that's upcoming. I know some people are already voting yes. I know some people are more skeptical. I'm sort of in the middle right now on how I want to vote for this because of these concerns. And quite frankly, dilution hasn't really been a concern of mine because over this entire period of time, we've been trading for a good premium to the net asset value. So they can dilute away because all the dilution is accretive because you're buying more of the underlying with what you're diluting. But now that they're trading at the net asset value and even below the net asset value, they're left with two options. Either they don't buy any Ethereum at all and they sort of stagnate, or they issue shares below the net asset value, in which case it's actually bad for shareholders. And so now that they're asking for this big chunk, I'm kind of curious around how exactly they want to continue this strategy going forward, assuming they stay at par with the net asset value and even slightly below the net asset value. How does the strategy adapt to that specifically? Anyways, I hope you enjoyed this video. Again, I'm just trying to pose some questions as a shareholder and as a critical thinker. And I hope it doesn't come around as FUD or just blind bearishness. I welcome the dialogue, as I mentioned in my X thread, and I'm just trying to understand this. Thank you so much for watching. Hope you enjoy these updates on a weekly basis, and I'll see you next week for the next episode of the BMNR Weekly Updates. Thanks so much.